What's up, traders? You're welcome back to the channel. It's the King's Crown Academy where traders are crowned. And on this channel today, we're going to be talking of the current state of the US economy and the impact on the forex market, especially the major pairs. My last video, I taught you guys about the top 5 pairs you need to trade as a beginner's traders in 2025. And given the economic condition, today we're going to be looking at fundamental analysis on this channel, right? You guys know how I love to come up here and do this with you, right? So let's go into the video. Okay, first thing, we're going to be looking at the overview of the US economy, right? First things first, let's set the stage by discussing the key element of the US economy over the past years, right? We've seen a lot of volatility being driven into this market. Guys, you can tell me you've not been saying it, right? The Euro USD has been spiking up against the dollar keeps coming down, right? You check the dollar index, you're going to see the charts, right? Okay. First thing we're going to talk about is the interest rates and the Fed's policy. Okay, the Federal Reserve has been hiking interest rate, of course, to combat inflation. But the pace of the increase has slowed recently, and this has shifted the crucials because higher interest rates tends to strengthen the US dollar by attracting in more capital inflows into asset like bonds, right? Okay, now talking about this inflation now. Inflation has cooled off since the 2022 market run, but still it's higher than the Fed's target. Okay, so the recent inflation data is still a concern, right? But the Fed seems to be in a wait and see mode. So how long will they continue to wait and see how buyers react to the current price rate? Okay, now let's look at the job market and consumer spending. The job market remains relatively strong with unemployment at low levels. However, consumer spending is starting to show signs of strength on higher borrowing costs, like taking a toll on household. Of course, you know how this thing goes, right? At the end of the day, the household suffers. Okay, so you might be wondering why there's increase in prices of goods, in prices of items, eggs spiking up, a lot of things, commodities going up, there's increase in prices. This is practically the reason, all right? Okay, now we're going to look at the dollar role in the forex market. Let's talk about the US dollar now, which is almost the central factor of the forex market. The dollar strengthens or weakens is often driven by interest rates. And these interest rate differentials affect the overall volatility in the market. For instance, a strong US dollar often results from aggressive rate hikes by the Feds, meaning that when the US rate rises, it attracts capital flows into the US assets. Like I said before, currencies like Canadian dollar, bonds, assets like bonds, they get to increase the dollar strength. Okay? Now, the result, stronger dollar against other major currency pairs like euro, yen, even commodities like the Aussie and Canadian dollar, you tend to see that the dollar is strong as against these other pairs. That's the result. On the contrary, when you have a weak dollar, on the flip side, the Fed signals a dovish stance or cut rate, we could see a weakening of the US dollar. And that's what we have seen in the last market run. Okay, from January to May, the dollar has been falling, which gives the euro, the yen, Canadian dollar, a strong bias. All right. Let's take a closer look on the impact of the US dollar on major currency pairs. And the first currency pairs we're going to be looking at is the Euro USD. First, we have the Euro USD, which is the world most traded currency pairs. I treated this on my last video. All right, why you should trade the Euro USD. Okay, this is the two strongest currency pair in the world for any beginner trader anywhere in the world, right? And it's relatively opposite to the US dollar. Okay, when the US dollar is buying, euro is selling. When there is demand for euro, the US dollar is selling. That's how it's always been. And then getting the statistics into the relationship of these two pairs, the correlational relationship will help you to determine your daily bias on whether to take a buy or whether to take a sell. You can watch my video on the Euro USD projection, price projection. I gave a 1 month projection. You took a peep, a glance into the price action of the Euro USD ahead of a 1 month move. Let's see how the market plays out. Okay, so back to the point. Euro USD first, like I said, it is the world most traded currency pair. Now, the value of the euro relative to the US dollar tends to be affected by the Fed's decision and the European Central Bank policy. Of course, these are the big players in the market. Like I said, they are the bigger fish. We retail traders, we are all like a baby fish in the big ocean, right? The banks, the central banks, the Feds, they move the market, right? They are the big participants in the current market, right? Now, when the Fed raises rate aggressively, it tends to lift the US dollar against the euro. But right now, the ECB is also in a tightening phase, which means the euro isn't weakening as much as it would on a normal scenario, right? What does it have on the recent price action? Let's look at this now, guys. As of recent, right, you can see that there is a range-bound movement in the Euro USD. Of course, that's what I've been preaching since last week, all right? The Euro USD has been on a range, and recently, the sellers took the buyers and then they broke down a major low, right? Okay. The market has been ranging. Now there's no clear price action, but now there is a directional movement, so you can capitalize on this. Now, pairs like USD/JPY. Next up, the Japanese yen is traditionally a safe haven currency, of course, but the relationship between the yen and the US dollar is closely tied to interest rate differentials, guys. Now, the Bank of Japan has kept its interest rate ultra low, which creates a stark contrast with the Fed's tightening cycle. This has caused USD/JPY to surge, with the dollar strengthening against the yen. Now, if you're wondering why, despite the nature of the US economy against the yen, dollar has the upper hand, this here explains the reason, right? The Japanese has maintained a relatively low interest rate, right? And they have been stable. So meaning that the US has more strength over the currency right now in the market. So in case you're trading, you'll see a bullish move. The recent development, right? With the US economy outlook, that's looking at the recent price action. With the US economic outlook being stronger, Japan's being relatively subdued, we are likely to see continued USD/JPY upside, meaning a bullish move continues, right? So if you're holding the buy, using this fundamental, you need to keep holding your position because the market is obviously bullish, right? It's beginning to change. The algorithm signature is printing higher highs and lower highs, right? Okay. Next up, the GBP USD. The British pound has been under duress against the US dollar as well. Then the Bank of England has also hiked rates, but not at the pace of the Fed at the economic data from the UK. So it has been weaker than expected, leading to less confidence in the pound's ability to hold its ground. So what's the technical outlook, right? GBP USD has been heavily impacted by both domestic inflation concerns and global market sentiment. And then we have seen choppy price action as traders try to gauge the UK's next move compared to the US, right? So what is trying to tell you that if you've been on a buy position for so long, you might as well consider taking your profits, right? Because there's been a clear reversal sign on this pair. All right, so for those of you still holding the pair, the GBP USD against the dollar is beginning to get strength and it's coming back up gradually. So yes, you can consider taking positions and be careful and wait for the next market manipulation. Okay, let's look at section 4, the potential risks and opportunities involved in the market right now, given this current state of the US economy. Okay, like I said, in case you're just joining the channel, you can like, subscribe. Today I'm treating a fundamental topic, right? It's a fundamental analysis, the current state of the US economy and the impacts on the forex market. And then we're looking at major pairs, right? We talked about the Euro USD, we talked about the USD JPY, and we talked about the GBP USD. Okay, and right now I'm talking about the potential risks and opportunities as it stands right now in the forex market, right? While the US economy is relatively strong, there are some risks that traders need to be mindful of. Guys, forex is not easy. You have to pay attention to details, economic details, technical details. You need to be able to dissect every information before you jump into action. Okay, so here are few risks and opportunities you need to consider right now, right? There is fear of recession around. There is fear of recession. A potential slowdown in the US growth could force the Fed to reconsider its tightening path, and this could create sharp moves in the forex market, especially if there is a shift in sentiment about a potential recession. The Fed might try to play smart on you guys, and that's why they are the smart money, right? So they might decide to change the flow, the other flow of the market any moment from now. So guys, be active, right? Be active. Now, geopolitical risks. We can't forget that global events like the ongoing conflict in Ukraine or issues with China can impact market sentiment, which can cause volatilities in pairs like USD JPY and Euro USD, right? And this fact is true because we'll be hearing rumors of war, political wars going on right now in the economy. All right, so watch that asset, watch that portfolio, and watch out for market structure shift, guys, on a larger time frame. Once this is happening on your pair, you should be thinking of taking profits, right? Okay. So what's the opportunity involved in this, right? On the flip side, if the US economy stays resilient and inflation continues to cool, we may see further US dollar strengthen. Now, watching the Federal Reserve guidance closely can present some great opportunities to trade the major pairs effectively. And I'm seeing this move right now in the market, and I'm seeing that the dollar is trying to have an impulsive move back up, right? Dollar is gonna hike and dollar is gonna hit back an all-time high. So watch out. The US economy is gradually coming back. All right, so you might want to reanalyze your whole pair. Okay, at number 5, and I'm wrapping up, right? Let's look at how to trade in this market environment, this current market environment, right? Now you must have been wondering how you could trade the current state of the US economy, right? So here's some tips to help you know the direction, right? And how to navigate the market. Of course, every new beginner's trader needs to hear this, okay, to guide you in your trading. You have to watch the Fed closely. Every morning you come to your chart to go to the news. Watch the Fed closely. The Federal Reserve is the key driver for the US dollar. So keep an eye on their speech, meetings, economic projection, right? Any hint towards a change in policy could send major forex pairs into new trend. Guys, that's why your stop losses are being taken out. That's why you are the liquidity, because these guys, they come to this market, they have meetings, they see a particular order flow, and they can change the trend at any time. You can influence the chart. So best be on the safer side. Watch out for their news. Tune into the news. Hear what they're planning to do before they do it. Okay? Use technicals and fundamentals together. Okay, even as you have listened to these fundamentals, you need to back it up with your technical analysis. All right, and risk management. Of course, without risk management, no matter how you trade, you're never gonna be profitable. Okay, so that's it on this video. To wrap it up, the US economy is facing some interesting dynamics with inflation, interest rates, and economic growth, all playing a role in the forex market. Understanding how these factors impact the major currency pair is key to making informed decisions, guys. Now, as always, stay ahead of the news, keep an eye on the charts, manage your risks carefully, and if you enjoyed this video, don't forget to hit the like button, to hit the subscribe button, right? And leave your comments in the comment sections. I want to know how you see the economy, what are your projections on the chart, all right? And until we meet again, it's your boy, the Executioner FX. Stay tuned to this channel, and I wish you a profitable week, right? Stop.